All right, here's a lot to unpack here. In Forex, when you're trading, the fundamentals matters just as much as the technical. So this article is coming from FX Street. Pound sterling drops to 1.25 after Bank of England notes signs of inflation easing. All right. So again, bear with me as we get through this article. The pound sterling experienced heightened volatility against the US dollar following the Bank of England's monetary policy meeting today. The Bank of England announced that its decision by a vote of 7-2 to raise interest rates 2.5%, bringing the bank rate to 4.5%. Now here's where things get a little muddy. Dovish opening remarks from the BOE chairman Andrew Bailey further weighed on the pair. After he said the committee had good reason to believe headline inflation would fall considerably after April onward. All right, so from a technical perspective, pound USD remains in a long-term uptrend. We'll look at that. All right, so here's where the confusion comes in. He talks about signs of inflation more generally is easing, but then adds that the secondary effects of high inflation continue to persist, and that the risk to inflation in the future remains skewed to the upside. So currently, the inflation in the UK is at 10.1%, double the 4.9 reading in the U.S. core inflation, right? Which is closer to 6.2, and in the UK versus 5.5 in the U.S. Nevertheless, it suggests the UK will continue to raise rates, and after the U.S. Feds has stopped. CBE Group Fed Watch tool is showing a 90% probability of no further interest rate hikes from the Fed. So the UK is saying they may have to continue to raise rates because inflation is higher than the US. And according to this Fed Watch tool, it's stating that more than likely there will be no more Fed increase rates hikes. Then you have the debt ceiling weighing on the dollar, but this is going to pass through. You know, they can't let the they can't prevent the an agreement to resolve this debt ceiling. You know, they do it from year to year, time to time. So, lastly, another sign that the rates are done. U.S. Initial job claims disappointed, 464 versus the 445 expected. All right, so let's go to the charts, and we're going to start with the monthly chart. And you're going to see in a minute, you know, clearly. All right, let's do this. You know, you can say going back to 2007 that the pound USD is in a downtrend, right? You could say that this leg is just a pullback, but on a smaller time frame like the weekly, price is in an uptrend. All right, so let's keep that in mind. And as you can see from the weekly, price has been forming higher highs as an equal higher high, but equal lower lows. We just formed a new higher high, right? All right. Now, if we go down to the daily chart, we go down to the monthly chart. If we can clear this daily sellers level, it's smooth sailing up to the 1.30. All right, now we'll go down to the daily chart. And we can see that price is on the verge of pretty much breaching this daily sellers level at 1.26. So the pullback was expected. The aggressive traders, they can actually go long in these levels here. Just looking at the volume here. All right, you see these wicks? These wicks indicate that sell-off was pending. Okay. So like I said, you got the pullback that you really wanted for the bulls, or if an opportunity to go long. Just want to see what this area looks like on a smaller time frame. Let's try the 8-hour, 4-hour. Okay, not really getting the volume that I want to see on a smaller time frame to call that a level of interest. 2-hour. Yeah. So really not sure how far price is going to pull back. This extended range candle can't go down much further for the day anyway. Friday could trickle down a bit more. Let's go to the weekly chart just to look at the okay. I'm not calling this a level, but let's put that in orange. I'll put it in red. You know, price could trickle back down to the 1.4, signaling a bottom and then moving higher. We'll just have to wait and see. I'm going to try to analyze this over the weekend to try to find an entry to go long. Thanks for watching. Subscribe. Please like the video.